Hello there, fourth dimension by Trading Time. Sean here. This is the update on oil. We'll begin with the highlights of the week. It was pretty quiet really, but we did see WTI and Brent fail at short-term resistance at the beginning of the week. And then Brent made three attempts to break key support at 73.17, but did never actually close below it. Also had a change on the market profile in that the point of most time has dropped on WTI, and the WTI levels have changed because we have had a rollover. Begin with the short-term chart on WTI. I've just circled where we came up to resistance on two occasions, and what we have now is that resistance at 72.74 and our support is at 69.30. Slight change on the daily chart in that we now have a new resistance at 73.13 and of course that weekly level at 74.24. So that is the next major upside target. The problem we have though is really support is still a very long way away, all the way down at the monthly level at 65.07. Another problem for the oil market is what's happened on market profiles. So we've got a new downtrend, and so I've drawn that, and what has happened is the point of most time has dropped from being in around $81 and it's dropped to $70.89. When the point of most time changes, this is often the signal that a new trend can begin, and normally it's in the direction of the current trend, which is down. So there is a bias on the downside at the moment, and this increases the risks of being long. Look at the spreads, second month against 12, and we've really pretty close to that point of most time at $4.20, and then next support minus $2.52. Same sort of story on Brent. We've got $3.84 and minus $2.88. June 22, June 23 spread actually doing okay, but we have that major level at $3.77 and then a zone of support from $3.34 down to $2.73. Similar on Brent, so that's June 22, Dec 22, and we've got that support at $2.07. Short-term chart on Brent, and the same as last week really, the levels are very close together. So we have 76.61 as resistance, and ahead of that we have 73.80 to 74 even. But it's the daily chart that we really need to focus on. We see that it keeps on trying to close below that weekly level at 73.17, and we now have a fresh resistance at 76.70. If we make a daily close below 72.50, which was the low of last week, then that puts both WTI and Brent back in a sideways trend, and it means that you have to liquidate any long positions. I look at the market profile on Brent, and the point of most time has not changed, so it is still the same as before, and we have that resistance at 76.44. So in conclusion, the lack of nearby levels on WTI means that we still need to concentrate on the Brent. The change in the point of most time on WTI means that a new trend can begin, and this increases the risks in being long. A daily close below 72.50 on Brent places both markets in sideways, and our next upside targets are 74.24 on WTI and 76.70 on Brent. Remember that the WTI major supports have changed in value, so they're now 65.07, 62.22 and 59.52, and a daily close below 59.52 would restart the downtrend. Major support on Brent 73.17, 65.72 to 65.10, and then 60.89, and it takes a daily close below that final point to restart the downtrend. Here are your supports and resistances for the week: D for daily, W for weekly, and M for monthly. projected ranges have seen some changes actually. So first deviation up on WTI is $1.30 and $2.50 below, and Brent is $1.50 and support is $2.50. Okay, I said on my interview on Thursday that I'd just explain a little bit about how I use the spreads to qualify whether positive patterns or negative patterns are likely to work. So I'm just going to explain the previous two signals that we had. So I've circled back in August. We had a bullwhip signal on Brent. We also got a positive signal on WTI on the same day. And when I look at the spreads, it's not the exact same spread that I was looking at the time, but that contract's expired. So I'm going to just show you the highlights of a different spread, or the one that we're looking at the moment. And what's happened, I do remember it as a similar thing. We were coming down to a major monthly support, so that blue line there on the WTI spread. And then when I look at the Brent spread, we had those pink circles, which is what's called rolling pops. And so on the day of the signal on the futures, we had a big up day in the spread, and the following day we closed back above weekly resistance. So the spreads were coming into support basically. Now the second signal is on the negative stochastic divergence, which was on the 10th of November, and this was a much more obvious and powerful signal. So what I'm looking at here is the high of the trend was made back in October. I think it was the 23rd of October, and it was at 84.18 was the high. Now when we got the negative stochastic divergence signal, the high that day was $83.74. So there was only about 40 to 50 cents difference between the absolute highs. However, the spreads told us a very, very different story. So looking at the crude spread, and on the 19th of October, the high that day was $8.06. And actually the high in the spread was about 3 or 4 days before the high in the futures. But then by the time we got to the 10th of November, when we got the stochastic negative signal, the spread was down at $6.49 was the high that day. So there was a huge difference. So the spread had weakened by $1.50, and that told me that the fundamentals of the oil market were actually very weak. So even though we were pretty close to the highs on the futures, the fundamentals of the spreads were actually very bearish. And so that's what helped me to say that stochastic divergence is a major negative signal and the market needs to go lower. Okay, hopefully that's a good explanation. Okay, see you next week. Thanks very much.